Notice is hereby given of a special meeting of the Board of Directors of this district to be held at 105 Port Road, Port Isabel, Texas, on the 21st day of December 2015 at the hour of 10 a.m. for the consideration of all the business of the agenda below. This notice is posted at the office of the district on December 16, 2015 at 10 a.m. in accordance with the Texas Opens Meeting Act, and a copy has been furnished to the County Clerk of Cameron County, Texas, not less than 72 hours prior to the time of said meeting. This meeting is called to order. There is a quorum. The only director that is not present is Mr. Scott Friedman. Item 2 is invocation and pledge of allegiance. Would everybody rise, please?
Heavenly Father, we want to thank you again for a wonderful season, Christmas and New Year's season. Lord, we just ask you to keep everybody safe as we go to and fro. Lord, we just ask you to give us wisdom and knowledge to understand what the auditor is going to be presenting today. And we just thank you for everything you have blessed us. In Jesus' name we pray. Amen.
Amen.
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Very good. So we'll move on to item 3 is presentation by Long and Chilton, LLP, on the audit for the fiscal year 2015. Mr. Brewer.
Good morning.
Good morning.
Well, we're a month earlier than last year, but about a week and a half later than I wanted to be. So at least we're making progress along those lines. I'll try to be brief. I'm just not going to go through the whole audit report. I know you all have it? Do we? Yes. They have it. Okay. Just want to make sure. So let me go through it. Let me just paraphrase first off and just summarize. The district's in good financial health, so that's usually a very good sign. It's always nice to be able to audit something that you know is not in trouble, because then you come before the board and have to deal with that, and then it doesn't go well for the rest of the audit report. But anyway.
This is not the city of Port Isabel.
Oh, thank you very much. And I don't do the city of Port Isabel, so that's okay. But anyway, I didn't realize the city had a problem. But anyway, all right. Well, anyway, let me just go through it, and it just may take about 10 minutes or so. Page 3, 4, and 5 is our audit opinion. And that audit opinion is fairly lengthy, but that's just the way the standard reporting is currently. But basically, on page 4, you'll see something called opinions. And in there it just kind of basically says, that the financial statements are fairly presented in all material respects, talk about the financial position of the governmental activities, each major fund district as of September 30th, etc. That's a clean opinion, no qualifications, no nothing. So that's a healthy report. There is something called an emphasis of matter right after that. This year was kind of a complex year for reporting, and that's because there was a major statement issued by the Governmental Accounting Standards Board called GASB 68 that takes some effort on everyone's part, ours as well as yours, to figure out what the adjustments were having to be made and how they were supposed to be reported. I won't go into the detail of that because they are somewhat complicated, but suffice to say, several years ago I came before you and said that at some point that the governmental-wide financial statements were going to have to report, in effect, the district's responsibility for the financial responsibility for pensions and whatnot, and that's basically come to fruition. So now it's there, but it's only there on the governmental-wide financial statements, and I'll explain that in a minute. But again, it's a clean opinion. And not only that, on the government side, when we do a governmental audit, there's also a report later on in the back that talks about the governmental part of the audit, and there was nothing that came to our attention that warranted any kind of discussion on that either. So I'm just going to go through really what they call the management discussions and analysis. This is something that you all put together, and then we kind of look at and make sure that the numbers coincide with what the financial statements are, because the financial statements are only like 2 pages, realistically. But the MD&A, the management discussion analysis, kind of goes on for a few pages, and that's supposed to be an easier way to read these financial statements. So I just want to go through a few items. It talks about the financial highlights. I'm not going to go through there, but that's kind of what went on through the year. There's the financial statements. Okay. So I'm going to go quickly just turn to to page 12, page 11 and 12. Every board, every time you go to a financial statement presentation, you go to a government entity, they always want to know, well, what's my fund balance? And they only talk about one fund, and that's the general fund, because that's normally your operating fund. And so on Exhibit 3 on page 11, you can kind of see, in a nutshell, where your fund balances have been over a period of time, all the way back to April of 2001. That's when your fiscal year, before your fiscal year changed to September. And you can kind of see your fund balances, how they've measured up over a period of time, and some other things like your revenues and things like that. The only odd one in the whole group is the September of 2013, because that's only a 5-month issue. So that kind of skewed the numbers. So when you see the percentage of fund balance in relation to revenues at 140.9%, well, that's kind of, yeah, but hold on a minute. That's because you only had a 5-month period. So you really don't, you're really not in that area. So you kind of look at the 73, 71 range, and that's where it's been. So it's been fairly good. And obviously at this point, your revenues at $8 million is what it's coming to in the current year, with a fund balance of 5.7. Well, by 5.771, so I'll show you that a little bit later. But flipping over to the right on page 12 is your general fund in a nutshell. You can see your total revenues of $8,022,000 as compared to 7.4 in the prior year. So you look at it and you say water services are up. Yeah, they're up about $260,000. Wastewater services are up. That's about $240,000. And your other one that went up is your tap fees, and that's about $56,000. So you can see your total increase in revenues. And then you look at your expenditures in just the service operation. Yeah, that went up a little, $121,000, but your capital outlay went down $141,000. So you actually came out a little bit better there. So in the end, when you look at the excess of revenues over expenditures, $1,362,000 this year, $778,000 last year. So basically a positive increase of $584,000.
Making money.
Yeah, well, yeah, anyway. And then you can see what other issues, you know, how much were transferred to other funds, et cetera, et cetera. So at the end, you'll see that $5,771,327. That's the same one we talked about over here at the end. So we'll go through that one. You'll see that number again a little bit later. If you flip over, the next two pages really are just talking about the debt service fund, the capital projects fund, which I don't really want to go through. But I do want to go through the Exhibit 7 and 8, which are page 15 and 16. Those two issues are just, one, what your capital assets look like, and they're basically a little bit more delineated in the footnote disclosures. But you can kind of see your land, your construction in progress, how they are this year. You know, construction in progress last year at $16 million. Well, that's already been reverted back out into the infrastructure and to all the other areas, basically the improvements in other buildings and other stuff like that. So you can see it all in there at $71,600 and $621,000. Pretty much the same as the prior year, but again, just how it's moved around. And your long-term debt on page 16 on Exhibit 8. Your GO bonds at 14.2, less than last year. Your revenue bonds at 6.2. Again, you're paying that down. You did have some refinancing bonds this year, and then you see on the right after that, well, you see $20,817,000. And in that second grouping, you can see the compensated absences, and you see net pension liability. That's the new one. Not only did we have to put in what it would have been last year, $1,218,000, but now it's $1,311,000. So that's a new issue that we are now showing. And of course, your bond ratings currently fairly good, and AA, A-little-a, whatever they want to call it, A2, and Standard & Poor's A+1. I don't know if have you all ever gone up when you've gotten your ratings to New York and visited with these people?
We never had them.
I did once.
Did you?
When I was with the city.
Who'd you go with? Moody's or Standard & Poor's?
Oh, Standard & Poor's.
Yeah, they're a laid back, no problem, how you doing kind of thing. Moody's is more a very stuffed shirt. You don't want to sneeze without, you know, doing
I
something.
spent half a day convincing them that South Padre Island was a gold mine.
Yeah, they're not my
Only time
favorite
Bob
group.
Pinkerton ever said good job. I mean, in 6 years, one time, and it was after my meeting with those boys, because I laid it on heavy.
Okay, well, anyway, that's the MD&A, and there's a lot more information in the MD&A. And again, it's a recap. It's a little bit more in layman's terms. It's pretty easy to determine. But if you look at page 18 and 19, these are actually the financial statements. I know you almost need a magnifying glass to read them. But you can see the general fund, the emergency preparation and recovery fund, the debt service fund, the capital projects fund, the first four columns on page 16, and then the total. And there on the bottom, just for so you can kind of see how they work. There's that million. You go all the way down to total fund balance on the bottom. You'll see 5,771,000. Well, that's your general fund, and it gives you all the categories of the general fund, all what makes it up. Now you get to the total, and you see 16,572,000 in fund balances between all of them. And then you see this adjustments column, right on page 18.
This page, okay.
Yeah, right on page 18, way on the bottom, right where it says total liabilities and fund balance and total fund balance. Well, when you take all your fund balances together, you have 5.7 in general, you got emergency of 2 million, you got 2.7 in debt service and capital projects of 6. That adds up to 16,572,000. Well, in the old days, that's all we ever presented because governments operate on funds. And along comes GASB 34, General Governmental Accounting Standards Board number 34. We're now at 68, in case you want to know. That says, hey, no. We need to take into consideration other issues as well. Look at it from a business perspective. What else do we have that we're not reporting? Well, you got all your capital assets. You got all your infrastructure. You got all that stuff put together, and you have depreciation on those assets. And on top of that, you got your debt. So make an adjustment in that middle column or that column up on the top that says Adjustments Note 2. And the majority of those adjustments is to get your cash basis, fund balance, financial statements into an accrual basis type of accounting reporting, which is what you normally would see in a corporation. And when you do that, now all of a sudden you're bringing in the debt, you're bringing in the capital assets, you're bringing in everything. And so that column, that's what they call the statement now of net position, not of fund balance, is in effect the summary or the transfer of all those or the way it's now going to be read. And that's really what they call the government-wide financial statements. So you look on the bottom, you up on the top here, it says total assets of 89 million. You see on the far right column, the statement of that far right column, statement of financial position or net position, 89 million of total assets, 628,000 of something now called deferred outflows of resources, and a lot of that stuff is related to the pension, it's related to the bond issuance, things of that nature, but they want to classify it differently because they're not necessarily, they're assets but not quite assets because they pertain to a different year. And then you have total liabilities of 23 million, which now includes your debt, right? And you see that net pension liability down there at 1.3. So at the end of the day, you come back down 66,646,000, and that 646,000 is broken down into basically those three components. One, well, how much do you have invested in capital assets? Because technically you can't really use it. It's not like you can go sell this and use it. So you take those amounts of capital assets less the amount of related debt to that, and that's 57 million. And then you have other debt service, the amount that you've pushed over and ready to be basically restricted for that in the current year of 2.2. And what's left is unrestricted, 7 million. And that's what it is. And that includes your receivables, your taxes, all that stuff, which you would not necessarily have in the cash basis financial statements. That's how that works. On the right side, on page 19, kind of the same thing, but this is now the statement of activities or the income statement. Same issue. General fund, we talked about it earlier. You have the net change or the excess of 283,000. You had a beginning year balance. I'm looking at the left column all the way to the bottom. Of 5.4 was your fund balance at that time, and now you have 5.7, which correlates to the number back over here. And you go through all those funds, and you see the total, that you get down to the end of 18,493,000 is beginning of the year restated because we had to restate prior period adjustment of 945 was part of that pension adjustment. But then you get down to the end of statement of activities, right to the far right column, and there's the 66,646 that we have that correlates to the 66,646 on your net position. Kind of messy, but that's how it works. What's really fun is when you have an entity like the county that these are nice, but now you've got all these funds that you really have to disclose, and it gets to be kind of fun. But anyway, flipping over then starts the notes to the financials, and so I just want to, kind of, if you want to check these off, you might want to look at page 37 is your actual capital assets and what happened during the year, what you had in beginning balances, what you had in additions, as well as retirements and reclassifications. And the reclassifications was the construction in process and where that got reclassified to. And keep in mind, we are depreciating these assets on the government-wide statements, but not anywhere else. Okay. Seventh issue I want to talk about is the debt, and that starts on page 39. Actually, it starts on page 37, but if you just flip to 39, you can kind of see the overall change from one year to the next. 9/30 of 14, you see all your debt, including your net pension liability and compensated absences of $23 million, but the bonds were 22.2. You can see the additions, you can see the reductions because of that refinance is in there as well, and what's due within 1 year. And if you flip it to page 40, which I think is the one I would use more often when I look at planning, page 40 shows what your debt service requirements are going to be, for the next 5 years and beyond. So you can see next year your revenue notes and your general obligation bonds. You have principal and interest on both of those, and you can kind of see where your totals are going to be necessary for the next several years. The other issue that we'll talk about a little bit is on page 42, or 52, I'm sorry. And then we go back to the general fund, because everybody talks about general fund, and that's really, the meat, bread, and butter of everything. But here's your budget to actual. And you say, well, Mr. Thomas said something about we had too much in the current year. Well, why did we have it? And here's the reason why. Well, your revenues, your budgeted amounts, you started off at an original budget of 7.8. You remodified your budget during the year. So when it comes in here, you say, well, we want to do a budget amendment. We think we're going to have less, so let's try that. So you ended up with a final budget of 7.437, but your actual revenue came in at $8 million. Biggest ones, you can see the variances up on the to the right. The water services came in higher at $182,000. Your wastewater came in higher at $294,000. Your tap fees came higher at $74,000 than what you budgeted. A little lower on the investment earnings, and miscellaneous was up about $41,000. So $585,000 of additional revenues that you hadn't anticipated. In addition to that, then, what about your expenditures? Well, they went the other way, too. The professional fees, basically lower, $106,000. Payroll benefits were lower by $92,000, $7,000 on the utilities, materials of $120,000, $41,000 on the repairs. Other went up a little bit, or is that the other way around? No, I'm reading backwards. Oh, capital outlay was actually up $249,000, but the other one was was actually going the wrong way of $11,000. But overall, $606,000 of favorable variances on your expenditures. So when you add those two, the 585 and the 606, you had, in effect, a 1.1 favorable variance, which is pretty good, pretty strong. And you had some losses on the gain of sale of assets, $350, another transfer of internal activities. You move money back and forth between funds, another $350,000 over what you thought. You had initially budgeted $732, but you moved $1,083,000. I can't tell you why specifically. I'm sure someone I can.
Those are for payments, right?
Yeah.
Either revenue or
I think because of the refinancing, you had to do additional. I think that may have been part of it. So at the end, $840,000 more over your budget. Better to be, I guess, over than under. It's always nice to be able to say, well, hey, you did better than you thought. And you did. On the right, page 53, I don't expect anybody to understand this one. This is actually the actual changes in that position, how we ended up with that $1.3 million, and it goes through a big gyration, and that's what took us a little longer to do this, because this particular pronouncement is somewhat complicated. And in addition to that, there's various ways to do it depending upon what kind of fund you have and whatever else. But You notice up on the top it does say September 30th of 15, but it also says for a year ended December 31st of 2014, because that's the measurement date at which you measure it. You don't measure it on your fiscal date. Then there's supplementary information, which there's a lot of, but beginning on page 56 on, these are the required schedules that the Texas, the TSI section, what they call, that is required. You are required to produce, and it's a lot of information, which I'm sure you will probably read during this Christmas vacation because there's nothing else to do. But there's a lot: taxes, levies, your debt service requirements. I mean, it just goes on and on and on. I think the last thing really I just want to talk about is on page 73. When we do, as I said earlier, when we do an audit in a government, or for a government, we have to report on the internal control over financial reporting and compliance. And you did not have what they call a section or an A133 audit, which means if you'd gotten monies from the government, either state or local, then we were compelled to do an A133 under GAO requirements, which means you have to look and test compliance. Luckily, that didn't happen. But we are responsible for coming in here at least and looking over the internal control over financial reporting, and we don't have any issues there as well. We did, I don't have it with me, we did issue a management report, a management letter. There are not, let me kind of paraphrase real quick though. When auditors come in and do an audit, they look at your systems, they look at what, just because we find things that sometimes we're wrong about, and then sometimes we need to bring to the board. These issues are not anything new that I recall, but they fall into different classifications. If they're control deficiencies, then they can be classified as significant, which means you gotta fix something. If they're material, that means you really got to fix it now because something's not going to work out. And then there's advisory. These are advisory. So advisory just means, guys, we see this. I know you're working towards fixing some stuff, but this is what we're seeing. Some of these are repeats. One of the issues I think was inventory.
The last 3 pages.
Thank you.
The last 3 pages.
I think the first one was inventory, and the issue on the inventory, I think, it's gotten better over the years that we've seen. But I think when you read it, what we're trying to say is you might want to try to begin limiting the amount of inventory you have. I mean, nuts and bolts and all that kind of stuff are really pretty immaterial. So to go in there and do a physical count and shut everything down for, a penny and a half bolt or something, I think probably is not material. The real stuff is the meters. That's where it becomes a problem. And I remember several years ago, those meters, some of them were obsolete, and then all of a sudden they grew legs and they walked off. We don't know where they are, that kind of stuff. So the issue is you probably have a better handle. You should have a better handle now in regards to your needs over a period of time and how fast can you get meters in. So you might want to consider, looking at that, as I said, looking at that and determining whether or not the inventory levels need to be kept to a minimum. Because if you can get if you can order them, and the reorder point is fast, then that would, stop the need to hold them. You would also cut down on the fact that they could be obsolete within a short period of time, or you could also cut down the potential for them to grow legs and walk off, and that's one issue. I think the fixed assets. I think the only thing there was the integration of the module. And that's something that's been going on, but I think they're getting better at it, and I think that's something that I would like to look at. And then the purchasing side of it, kind of the same thing. I don't think there's something that's integrated. So sometimes, we're looking at approvals, and did they go through the approvals? Well, yes, you did, but it looks like every department's kind of doing their own thing, so there's no control, like a purchasing department where somebody can control and see what every department's head, and she can look at it and say, where are we with budget? And doing that. I don't think these are advisory, so it hasn't caused a problem. If we thought it was going to be causing a problem right now or next year, they would have been under control deficiencies, under significant, and they're not. But if it can help, then that's what they're for. And that's it. Other than that, as I said, the district finds itself in good financial health. and I didn't have any problems. The only thing that took a long time was doing this report. So it kind of grew by about 10 pages over last year, so that's about it. Any questions, I'd be more than glad to answer them.
Do you think a purchasing agent, when we've been discussing this, would be advantageous and worth the salary and all that, to implement all this stuff you're talking about?
I think it would. I think, having a purchasing person, maybe, if that person, it depends on the amount, and she would know better. But at least someone that could be doing the dual job, that person doesn't have to be only in charge of purchasing. So if that person is responsible for purchasing, if that person's responsible for purchasing, then I think you kind of got it covered. But right now, no one is. It's kind of
nobody's doing that.
Yeah, it's kind of all over the place.
Actually, everybody's doing it.
Yeah, everybody's doing it.
3 years
Actually,
ago.
We've been talking about it. And I
For
don't know
3
why
years.
Yeah. Oh, we haven't talked about
3
I haven't
years.
been here. Okay. Well, maybe that's something we need
Actually,
to-
right now, all the managers are in charge of purchasing their own, so it's.
But is that the way to do it, or should there be a central?
No, I think a central person needs to be, I would prefer a central. I would rather have somebody centralized, but the thing is, you still have to work with the managers, because they're the ones that need it, but they have to work under that budget, and there should be somebody overseeing that, and it just doesn't come down to the end of the year and going, well, what happened here?
And
It
somebody
really should be more organized if you do
Yeah.
centralize it. 'Cause everybody will turn in their backups and paperwork
Exactly.
to that same
The
person.
backups will be there.
And somebody with experience at purchasing, I
I
know
would think so.
Whitey's been bringing it up for 3 years now, the past 3 years, and so.
Yep.
You have a comment, sir?
A good purchasing agent, and I'm not just one that'll pick up the phone and say, okay, just go send it, that'll really work at cost, work at pricing, nail these suppliers down on what it's gonna cost, will pay for themselves. They will save you enough money if they know what they're doing. They'll pay for themselves. It's simple as that.
In a private company, yeah, but this is government, so you know how things
It's not
are in
government,
government.
We, wait a
When I was
minute,
on
wait a
the
minute.
ci- When I was on the
Well,
city
then let's
board,
just
we
throw
had
it
to
all
get
out the
three-
window.
We had to get 3 bids on everything. I mean, sometimes we couldn't, and I
They-
realize you guys can't.
they get 3
because
bids.
Well, they try, but I
Yeah.
mean, if you had somebody just working on it all the time, I mean, I agree with what Whitey just said, I'll pay for
Then you
myself.
explain this to me. Why can I buy pipe cheaper than the water district can?
I can't explain it to you.
Good question.
Yes, it is a good question. That's because we don't have anybody in here saying, wait, let's get your pencil sharp. If you guys can't get your pencil sharp, we'll go to vendor B.
Right.
Now, whether you're public or private or whatever, that works. I want 30 days, you take your, let's just take your general water pipe, okay, from 6-inch down. We're not talking about the big stuff and everything, the stuff that most suppliers, even 4-inch down. And you get Bush Supply, who's now Morrison, you get the different suppliers say, I want a 30-day quote, I want a 40-day quote on what pipe and fittings are. Yeah, well, what's the other guy tell you? Oh, we don't peddle prices, sweetheart. You sharpen your pencil. Now, the only time you have a problem, sometimes it's availability. They can't move as much as you need, but that's something you can adjust out. The purchasing agent will pay for himself. I honestly believe that.
If I may,
If they do their job.
and if I may intercede a little bit on this, interject. The idea of a purchasing agent, the only purpose for his being, in effect, if you're gonna have one person solely as centralized purchasing, is to basically do the best he can for the district. When that happens and you're basically having that person deal with a manager who's got his budget, then it's not just the manager making the decision, oh, I've got a budget, I can do whatever I want. It's that oversight that says, wait a minute, what are you doing, and let's work together on this. And so there's some, the vendor, in effect, knows that he doesn't have just that person that's gonna be able to say it. He's gonna have to go to the second person. So the collusion issue and the potential for fraud or kickback is significantly reduced. That's the issue from an audit standpoint. Unless the purchasing agent's in collusion, so then we'll find out.
Oh, it's,
That's why.
we're in everybody's pocket. Yeah, especially Martine, he's learning.
All right, very good, sir.
All
Any
right.
questions? Any other questions?
I have one question on page 15.
Okay?
It says improvements and other buildings, 8.5 this year and then 154,000 last year.
Mm-hmm.
Would you, I mean, I would think that the total capital assets would be more this year than
Well,
last
it
year.
is. It's, if you look at, it depends on where they're classified to. But again, if you look at page 37, remember, this is a summarization by this category.
Okay.
But page 37 is really where it's at.
Oh, okay.
All right? And you see that, you see up on the top, the construction in process of 15,833,217, that's that second to the last column on the right. Because what happens was once it's constructed and done, then it's reclassified into the various components. So there it was classified into, for example, it's 15,782 was reclassified into 2.3 in buildings, 8.2 in improvements other than buildings, and then 5 million into the infrastructure. So that's really this is really more, this is again, this is a summary. This is the actual numbers.
Very good. Thank you, sir.
All right.
All right, so let's move on to item 4. Consider and approve the audit for the fiscal year 2015.
So moved.
Motion by Mr. Wells,
Second.
second by Mr. Cantu. Questions, comments? All those in favor say aye.
Aye.
Opposed? Motion carries. Be it that there's no further business to the agenda below. Item 5, meeting adjourned.